Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Friday, March 31st, the last day of March 2023. Thank you for tuning in. What's going on out there in the news? Well, we're going to take a look. The first thing that's going on is Trump was indicted in New York, and he's expected to be arraigned next week. It says, very specifically in this article that comes from Al Jazeera, it says, Republican accused for role in hush-hush money payment before 2016 election is the first former U.S. president to be criminally prosecuted. So that's happening in the news. And then the next thing we want to take a look at in the news is Robert Kiyosaki. Now see, listen guys, I'm just waiting for the next shoe to drop. Because the Federal Reserve right now hasn't lowered rates. And what was the problem that caused all these banks to fail? The rapid raise in interest rates. And it's still there. And so Robert Kiyosaki, he might have found what the next shoe to drop is going to be. And let's read on. It says, in the aftermath of the Silicon Valley Bank collapse, finance expert Robert Kiyosaki cautioned that the central bank of a global powerhouse may be the next to go belly up. The biggest bank that is going to go down, he said, quote unquote, and Robert Kiyosaki says, is the Bank of Japan. Oh my gosh. That is big. It says that the Bank of Japan derivatives market in the world today is financed by the Bank of Japan, and it's $2 quadrillion. I can't fix that. That's probably also why it will not go down, even though Kawasaki, I might not pronounce his name just exactly correct, but Robert, I'll say Robert. The Bank of Japan might not go down because they might not let it fail. But that would just mean pumping more and more money into the system all the time, which increases the rate of inflation. I mean, what do you think it's going to do? Our central bank in the United States, I say our central bank because it's here in North America, and it affects all of North America, including Canada. What do you think's going to happen if they continue with this raising their balance sheet by $400 billion in just a couple weeks? That's a very unsustainable trend, but they have to do it. They have to do it. The whole system would collapse. They have to keep the bank window open right now. The bankers, they just come up to the overnight window. And it's like, how much do you want? Oh, we need $30 billion. Okay, fine. Here you go. Next. Next guy steps up to the window. How much do you guys need? Well, it's not exactly like that, you know. The overnight banking window. It's not exactly like that, but it works something like that. In order to qualify, though, you got to be a bankster. Bankster gangster. You got to be a bankster in order to qualify, though. I mean, they're just not going to give big loans out to the ordinary people. You got to be. And, you know, when a bank goes to that bank window, it's like saying, hey, you know what? We're in trouble. They'll probably start keeping it secret from the people because they don't want people to remove their money from the banks. Well, they're hurting you right now. The big thing right now is people who have more than $250,000 in the bank are now moving their money into the bigger U.S. banks, thinking they're going to find safety there. Well, they're herding you there, and then they're going to herd you someplace else. Once they get you into all the bigger banks, and your account's nicely settled in there like a little nest in the big bank, maybe Bank of America or J.P. Morgan Bank or whatever, then those banks will start to get in trouble. And then there's only one place left to herd you. You'll have to go and move your money into the central bank for safety. What you call money. It's not really money. But then they'll electrify it and they'll put it on a book of digital, whatever. A digital what's it. And this will allow them to play with money a lot more than they play with it now. This will open the door for them. They can put date stamps on your money, make it so your money expires if they want. So that means you got to spend it. They can keep track of your money, know where you spend it, know what. That's all coming. That's a little bit in the future, though. That's when they get rid of cash. And that's their plan, to get rid of cash, ultimately. They've had this plan for a long time, and I've been talking about this for a long time on my channel. Excuse me. Silver price today. It's up 11 cents at 24.02. We might be entering into, right now, the biggest bull market in gold and silver that's ever had in the history of the world. On the front side of it. You haven't quite missed the train yet. Hasn't quite left the station yet. But you haven't got long left, guys, if you're going to get in on this. And you want to talk about fear of missing out. Yeah, you really should have fear of missing out on this one. Because the missing out on this one could cost you, for the rest of your life, you might regret missing out on this one. Quite seriously, when it finally hits. Now, I can't tell you exactly when the train's going to leave the station. But I do know it's not that far off in the future. That's what I can tell you. Cryptocurrency today. Bitcoin's at 28,432. And Ethereum's at 1831. Okay. I know you guys, a lot of you guys think that I'm a fan of this cryptocurrencies. I've never really been all that big of a fan of it. Because I'm not a real fan of anything that's all this modern technology. You know? But I do realize that this stuff has potential. Has a lot of potential in the future because of the way it functions. It enables people to be able to transact over the internet at lightning speed. And that fits in with the modern world. So that's why it has an awful lot of potential. But I'm not a real big fan. I suppose I do trust it more, and I'm going to give it credit. I do trust it more than I trust those Federal Reserve notes, which I really don't trust. But getting back to what do I trust the most of anything out there? Real physical silver in your hand. That is the ticket, so to speak. S&P 500, it's up 33 points on the day at 40.84. So we are seeing some gains in the stock market now, and Dow Jones is up 251 at 33,110. Now we're going to take a look at crude oil today, and it's up $1.07 at 75.44 on the day so far for crude oil. Taking a look at bonds and rates today. Long end's falling, short end's rising. We got a U.S. 10-year at, the 10-year is at 3.51, and it's up 3.2 basis points, and the U.S. 30-year is at 3.7, and it's up 4.6 basis points. And the dollar index today is rising, and it's at 102.45. You know, I've heard a lot of talk about a reset of the financial system. And you just can't do that. People are invested in the dollar worldwide. And you just can't come along and say, okay, we're going to reset it into something else. You know? You just can't do that. You got to play this thing out. And I think they're going to play this thing out with the central bank digital currency ultimately. They're going to play it out to its final conclusion where the dollar's worth absolutely almost nothing. They can play it out a lot longer with the central bank digital currency. But ultimately, they would have to peg the central bank digital currency to the dollar for dollar. And they could play it out for quite a while. But how much longer can this go? Well, first off, we've reached the point now where you cannot save in dollars any longer. You either go out there and use your dollars to try to make gain, but you can't save in them. Like in the old days, you used to be able to have a bank account, put your money in the bank, leave it there, and save and add more to it and stuff. That don't work now. You either got to put your money to work or invest it in something else. But savings is a game where you're going to be losing a minimum of 10% per year. Say, well, Glenn, how am I losing money by saving? My dollar's still a dollar in the bank, and yes, this is true. But after a year goes by, your dollar buys at least 10% less than it did the year before. And this is going to get worse. Now, I'm being very conservative when I say 10%. It's probably more like 20%. And I consider the best place to take your money is to put it in non-dollar denominated assets classes. There's actually quite a few. There's only two avenues of non-dollar denominated assets that are out of the dollar that are liquid. And that's gold, silver, and cryptos. Those are liquid, right? But there's other asset classes that are non-liquid. Things like fine art. But when you move into an asset class that's non-liquid, you have to realize that you're going to have to sell that at some point in time to realize your gains on it. So like land, a piece of land is a non-liquid asset. Now see, gold, silver, and cryptos are liquid assets. They can be converted very, very quickly into pure liquidity that's accepted in the system. There's only one form of liquidity that's accepted in the system. Right now, okay, yeah, I know there are passing laws in certain states and stuff where you can use gold and silver. But in general, over the system, and I know you can use Bitcoin to pay for things in certain circumstances, but I'm talking in general, the system only accepts one form of liquidity. It's accepted everywhere. And that's this liquidity that's not real. That's this fiat menagerie that the world has got itself in. I think almost all of our problems are stemming from our Ponzi scheme, the global Ponzi scheme that's ongoing with all of these what you call currencies that are all fiat. Most people don't pay any attention to this, but this is huge. Now listen, thank you guys for listening to my show. I appreciate my audience out there. And we'll catch you guys in the next episode. Have a great afternoon. Bye-bye.